Good day, ladies and gentlemen. Good day, ladies and gentlemen. Welcome to Rifumo Show weekly forecast, looking at the week from the 17th of August. So, going into this coming week, there's few pairs that I'll be closely watching at, um, and then the reason being is you look at the macros have flipped, and one of the reason of the flip in macros is the latest labor market numbers and inflation numbers. Looking at the latest labor market numbers and inflation, we am lying more bearish for the dollar. But let's start with, I think the first step where we
In the
can
depth.
start is looking at the macroeconomics and the news in the latest data. The first one that we're going to look at is the Canadian dollar gains for the third straight week, which now it says against the dollar. When you look at the Canadian dollar, has been a very strong bull for straight for the third week straight. The news says the Canadian dollar strengthens to 1.39 per dollar, posting a third consecutive weekly gain as yield spreads narrowed. Domestic factory data supported the recent narrowing in the gap between US and the Canadian bond yield. The spread between Canadian two-year yield and the US equivalent has narrowed by about 17 basis points this month. Canadian factory setting rose 0.1% in June from May, making a fifth consecutive gain. Stronger while sales volumes increased 1.2%. Meanwhile, US retail sales unexpectedly fell in July by the most in more than a year. Recent data also showed a stronger Canadian labor market and a weaker US employment. That was speaking about that the latest labor market was weak, while the Canadian labor market seems very strong, reducing expectation for the Fed. So basically, weaker US employment, reducing the expectation for the Federal Reserve rate hike this year, while raising prospect of the Bank of Canada to hike if energy remains high or if energy remains elevated. Canadian economy is estimated to have expanded at annualized of 3.4% in the second quarter, well above the Bank of Canadian 2.5 forecast expectations. I think reading this, you can tell that looking at the Canadian factory sales rose by 0.1%, which it's a very good increase comparing to a retail sales in the dollar, which was weak coming into June. But one thing that we should note is the fact that the US labor market last week was weak, including the inflation data, reducing expectation for the Feds to cut rates. That's very important for me. That is why when you look at this news again, looking at this news, I am more lying into being a bear for the dollar against the Canadian dollar. I'm looking for shorting the dollar against the Canadian dollar, looking for a retracement back to looking for a pull up, I guess a pullback to 1.39335. I'm gonna attempt to short that as a Canadian gains a lot of strength lately. And looking at the numbers for the latest inflation or US heat map, specifically looking at inflation and looking at the labor market latest, as the article or as that small article was saying, we can clearly see that as it's opening now, we can clearly see that we have seen the latest unemployment claims labor data be coming out quite weak. Also, inflation seems to sign of cooling inflation, and that has reduced the expectation for the Feds to cut rate. While opening this, I'm just waiting for this to open. Yes, we are here. Let's quickly look at the US economic heat map. We're just gonna quickly analyze that and why I'm more lying on being a dollar bear coming into this coming week. And the latest data that we've seen on the 13th of August, we have US initial jobless claims where the forecast was 202 and we got a 209. That's quite bearish as well. And whether you look at NFP, we also had a revision. ADP jobs opening, the labor market seems quite weak on the latest reading of that. Inflation 3.4, focus was 3.4, but I'm looking at CPI now. We came exactly at 3.4, but PPI came out slightly cool. That says an indication of a weekend inflation, and that reduces expectation for the Feds to cut rate. So that is why I'm more lying on the dollar bear. Whether even if you were to look at the trend on the latest inflation for the past few months, we've seen that we've been on this uptrend for the past few months. From March, I can say we've been on this uptrend on inflation, and that started with the war as well. But from June, we peaked at 4.2%. We came down to 3.5. Currently, we're at 3.4. And also, when you look at PPI as well, we seem to be cooling off. That looking at this data may not even be only for this the coming week, for this near term, whether it's a month now. I could be looking into being a bear for the dollar. You look at also PPI. In fact, from last year, we've been on this uptrend. Yeah, we peaked at again around June at 6.5%, and now we seem to be coming back down with the latest as 4.7%. That's been seems like a bit of cooling in the producer price index. So that is why, for me, overall, I'm a dollar bay. $1 bill, looking all at everything that I just discussed now. Also, we're gonna just quickly look at NFP so that when we look at the charts, we really discuss the charts. Latest NFP data seems a very strong miss. Seems like the data at the labor market, it's a bit weak. However, something that stayed quite flat, I think it's sorry. We look at the latest for unemployed rate also came down, which is something that's an indication of goodness that we've seen in the market, on the labor market. Besides that, everything else is bearish. So looking at the chart, as I said, I'm a dollar bear. Being a dollar bear, one thing I love about the top setup, the top setup on the H Finder, it's looking at, as I've discussed, that I'm bearish for the dollar, and I've went through everything, including the latest article that primarily discusses the reason why we're a dollar bear. Looking at the chart, we're gonna come back on the top setup as we're discussing the top setup. As we're discussing the top setup on the bear side, we have um, we have all these dollar currencies. You look at the dollar index, it's a -8. We can discuss that, but in details. But we've already discussed that, and everything else seems to be very bearish. The trend, the flip to be bearish, and a pair that I'm looking for as well. It's USDCAD. That's quite bearish as well. But I'm also interested in US oil, expecting for, if the deal happens, that will prepare my trade on the US oil that I'm hoping that coming into this week I'll get. So on the best side, I'm more interested in USDCHF, USDCAD, and US oil. Let's look at the charts and discuss the charts and how we're gonna align ourselves to this macros. Looking at this week, as I said, USDCAD on the 4-hour time frame, looking for this resistant area, and I'm gonna look for an opportunity if we come back to 1.39, 1.39355. Sorry, I'm recording this late in the day. I'm gonna look for shorts as we come back that, and another pair that I said I'm also interested in for the bears is as USDCHF. For USDCHF, I am going to look a retracement back to 0.81643, as it's slowly retracing back to the price session, is slowly moving back to that. So I'm going to look for a move back above. I'm going to position myself once we get back there to look for this low and look for lower prices in this week. I'm hoping that this week something will happen. The entire week last week we seemed to be ranging in that range. However, if we break above, come back to retest that resistant area, I'm gonna look to attempt my short on it. One thing that is very interesting for me, and I think um, I'm really interested in putting my head on, not necessarily my head, but an attempt to short. It's US oil. I'm anticipating that if look, the macros are saying inflation is coming down. Can the oil prices come down? There is a possibility of that. As I said, I've showed you all the top side. I've first got everything. Gives me a reading to say it's a -5, which is bearish. So I'm gonna look for a retrace back to a possible trade on $83.051 per barrel. If it gets back to that, I'm gonna look for a trade. Possible targets are $74.223 per barrel. That's for US oil, and these are the possible short currency trades that I mean shorts position that I'm looking for this week, and I will be putting a close eye on. Moving ahead on the bull side, as I said, I'm ready for the dollar. But what can I trade the dollar with? One of them is gold. I'm looking for gold, silver, gold and silver longs. But British pound and GG, I'm looking for longs as well. And if you look at this, a very bullish indicators for that. AUDUSD, the good news with AUDUSD is still bullish. And remember the inflation that in Australia is 3.4, which has been sticky for from the first quarter of the year. But what's interesting here with Australian dollar against the US dollar, I was long. So last week, which was Friday, I took a long on here. I think I've taken profit on this high, but it seems like if it retraces back to 0.70561, I'm still gonna try again to attempt the long because there's not even rallied so much to the upside. I'm more interested in trying my trade on AUDUSD. And another one is GU, but GU seems to be it has rallied a lot to the upside. I don't have any trade here. It seems to be very far unless it retrace either all the way back to that support or all the way back to 1.32428 as my possible long trade as well. And as for futures and commodities, we discussed oil over and over again, I am looking for oil longs. I have two possibilities. On the daily time frame, I'm looking for support on 4,120 dollars per ounce, or possible retest on the 4 time frame, looking for a retrace back to when you look at support on $4,276 per ounce. I think my limit will be set here as we come this week to look for long there. But on the normally when I trade the gold, I might not have a take profit. I'm hoping for a more rally to the upside as as the expectation for the Fed to hike rates are low, possible for the rates to remain the same. We might start to see rotation to risk asset, and some of the assets that might benefit is gold, as the possibility of rate cuts have been decreased. I mean, for rate hikes has been decreased for for this quarter of the year. Another one also similar move. It's I'm looking at silver, even though I don't like the 4 hour time frame. But if it comes back to around $61.82 per ounce, I might attempt to long silver as well as one of the commodities that I am looking for the rest of the week. Interestingly, GJ, we have seen last week that um, the the BOJ have been doing interventions for 2 times now. The first intervention was around 30th April. Now we've seen the interventions, but we've seen immediately that all the currencies have rebounded. I was hoping that earlier on, when the move started, I was hoping to look for a trade on the retest back to that demand area. However, it didn't retrace enough. But right now, my question is, can we even get another retrace back? If we do, I'm gonna still attempt to look for GJ longs. Again, moving ahead, and I think we're now gonna look into indices. Before we look at into indices, I would love to look at the current article that maybe speaks about that. We discuss it a bit. Who is that? So here, the U.S. stock swings lower. U.S. stocks, oh come on, U.S. stock swings lower on Friday as macroeconomic headwinds weighed against signs of tech optimism from earlier in the week. The S&P 500 eased 0.2 from its record high, while Dow Jones and Nasdaq fell about 0.5%. The long maturity Treasury yield swung higher amid concerns that the Federal Reserve could be complacent of higher inflation. Despite the seemingly cool price data released this week, Alphabet, Amazon, and Broadcom and Oracle swung to losses. Meanwhile, Applied Meta dropped about 5%. So basically, this showing us that when you look at the indices, we've seen that S&P 500 is already traded to all-time high. Students already have traded to all-time high, but the tech sector is slightly lagging, even though we got a good move, a good rebound, and I'm happy that we got that on a long-term trade that I was looking for the rest of the year. Again, looking at the crude oil extend gains 5% this week. Crude oil rose above $82 on a barrel on Friday, extending gains to more than 5% this week as U.S. increased economic pressure on Iran to reopen the Strait of Hormuz, which we've been going back and forth with Trump. The Treasury Secretary Scott Bessent said Washington will impose unprecedented economic pressure while maintaining its naval blockade of the Strait of Hormuz. But basically, in a way, they're trying to say the US is hoping that it might squeeze Iran to open the Strait of Hormuz, but I'm not going to deal into the geopolitics of it because a lot has been happening. However, something on Friday, gold extends gains for a second week. Gold rose above 4,380 an ounce on Friday, recovering from an earlier losses and recurring second consecutive gain as investors assessed the outlook for the US monetary policy. And I think we have discussed that, but something that really speaks of what I have been saying when I look at the hedge fund, the hedge fund. The recent US CPI and PPI data showed inflation pressures remaining contained, suggesting that the impact of higher energy prices linked to the Iran conflict eased in July, reducing expectation of aggressive Federal Reserve stance. As I said, possibility of Fed's hiking rates, they're starting to come down lower. But anyway, markets now see a roughly 1 in 3 chance of rate hike in September, although upcoming employment data and comments from Fed Chair Kevin Walsh at Jackson Hole 7 could influence expectation. Geopolitics risk remain another key factor as renewed tension could push energy prices higher and revive inflation concern. Meanwhile, strong central bank demand continue to support gold, with China adding around 20 tons to its reserve in July, making its 21st consecutive month of purchases. As I said, gold seemed to be a favorite for institutional positioning, and also given that inflation has been a concern, something to watch and it's of concern is the latest labor market that could be tricky if more bad labor market data still comes through. That's very good news for gold, because now the Fed might be forced to cut rates earlier than expected so that they can preserve the labor market. However, this is only one data that has been released lately, so we can't really look into that and make our decision on that. But gold still remains a favorite. The only thing to do is, yes, it's painful for now when you look at this move and you're not involved, and just now you just have to wait patiently to say, are we going to reject on that resistance, come back to demand? Maybe when we get back to demand and look for an opportunity to long gold, neither gold or silver. But with that being said, One of them is US oil. Can US oil, as if US oil, as geopolitics tension might, if that eases, could we see gold coming back, hopefully, to start looking at coming back to $70 per ounce? That could be interesting. Mainly support, I mean, this demand area of 70,000 per ounce. That would be lovely for the economy overall and for the inflation story, and that might really push gold to the upside as the Fed might not cut rates. And we know that Kevin White said a lot of things that he won't give us any forward guidance. However, the favorite word there is, what do you call that? I wanted to say team leader, but I forgot the name that he used. Oh, my English is gone. I spoke a lot of English now. But there is how to call that. But anyway, there is people. There is a team that he put together to do research. I forgot the name of that. If you remember, just give me a comment and say that exact word, because the word is not in my mind currently. As for stocks, just closing off with stocks, I don't have a lot. I'm still hold on Palantir. I'm looking for opportunity to buy Apple. And the good news, as I spoke of Nasdaq earlier on, to say, you look at Nasdaq. Um, I did go long on QQQ. I bought QQQ, and on the good rebound, I think this is one of the best rebound I've gotten on my portfolio. This is my long-term portfolio. I bought QQQ. The first entry was 664.87. Um, which is more like buying Nasdaq in a way. So I have a position on QQQ, which if you got that rebound, yes, we're not yet back at the all-time high, but I'm just trying to figure out if you're gonna get another pullback, maybe I'll look to still dollar average QQQ because I love it. I think long term there is still more upside, even though the tech sector, there is a lot of talks around the tech sector being a bubble. Maybe we might start to see that. We might see Nasdaq being the lagging factor in this case, because when you look at the S&P 500, since immediately afterwards we broke above the all-time high, trading at the all-time high again. You look at um, Russell again back to the all-time high. Looked for a retrace deeper, but we couldn't get that retracement deeper. So broke a bit again to the upside at the all-time high. Also USDT again back at the all-time high. Also starting to come back. As it comes back, are we gonna get an opportunity? Is the hedge fund gonna give us a bullish reading as the rotation is happening away from the dollar? In maybe can we move into stocks and some of the stocks that might benefit its industrial sector and the small cap stocks that I'm really watching at, really looking close into them. Also, the good news, and I think as we're speaking about gold being a very good buy, some companies and some indices that tend to benefit a lot is the South African top 40 index. I am looking at a retest to this low at the top 40 index. If you come back anywhere close to 104.459, I am gonna look to re-enter my position. Remember the first position that I entered on the rebound as well at 101.821 on my long-term positioning. I'm still dollar averaging the top 40 index, and it benefits a lot as now we've flipped to rotation 2. We see gold moving back to the upside. Can gold get back to the all-time high? If gold can give us that move, possibility for the top 40 index to give us that move a day. So that is why I'm starting to dollar average the top 40 index. I'm not right now, currently not my, it's not my favorite. The UK 100, I was on a trade on the UK 100, but I decided to take profit as it broke above the previous high on that low, and then we broke back up. Can we hold that? I don't know. Right now, currently, the UK 100 is not my favorite, and the China 50 is just a very shaky trade. Broke above. I was on this trade, decided to move my stop loss there to secure profit. came back all the way, took me out now back up, but it's a very lagging thing. It's not really a good index to trade. Something that I might start to look into. I missed this rebound. I was looking for this rebound on the Japanese index. We really got a very good rebound here, but after the rebound, can it really reaches back and look for continuation? I'm gonna look to buy this on my long-term portfolio. I believe it still has a lot of upside, as the currency itself it's a bit weak. But anyway, thank you so much for joining me. I truly appreciate you guys. Do not forget to like and subscribe. And this is the weekly forecast looking from the week starting on the 17th of August. Other than that, have a great day. Have a great trading week. I'll be catching you on the live stream during the PM session. Trade the close with me. Other than that, have a great day, guys. I love you all. Bye bye.